The decisive element in this year's budget was indeed the government's emphasis on affordable housing, ushering in changes of regulation in the real estate sector. The initiatives are expected to kickstart the economy and accelerate economic growth. Let's get an insight from the gentleman who has been the market leader in financing your Ashianas for years now. We have with us Mr. Keki Mistry, who has been with the HDFC for almost 3 decades now. Mr. Mistry, pleasure having you on Tax India Online. So, Mr. Mistry, let me begin by asking you about the boost given by the government in this year's budget, specifically on the affordable housing and real estate sector. So, what do you make of this? And do you, starting 2017, envision reducing a bit of Dharavi now?
All right, so I think there are two important elements or two important reasons, according to me, on why the government is giving so much trust to housing. And I think very rightly so. The first reason is that housing worldwide is taken as a barometer to gauge the state of the economy.
Right.
So if you look at the US, look at the UK, look at any advanced country, they closely monitor the housing starts. How many new houses are being constructed, how many are getting completed, and that gives them a sense of where the economy is. So that is one reason. Housing also creates a whole host of new jobs.
Right.
And it is also a big supporter to many other core industries. So if you look at industry like cement, steel, paint, they all depend on how the housing sector performs. Right. So by giving a boost to the housing sector, effectively you're encouraging all these other core industries. Housing is also a huge employment generator. So whether you look at construction workers, you look at carpenters, you look at masons, you look at plumbers, and so on and so forth. So many jobs get created because of the housing sector. So this is one objective, to give a boost to the economic growth.
Right.
The second, of course, is the government's long-standing program for the Housing for All program, where they say by 2022, a huge amount of housing supply will be created and housing shortage will be significantly eroded.
Right.
So these are the two fundamental objectives why the sector has got so much of a boost. Now, my sense is that given the way the Indian economy is poised, given the kind of demographics we have in India,
right,
on a sustainable basis, demand for housing will always remain strong.
True.
But if we can find a way of making housing a little more affordable, or making housing more affordable to the common man, I think that will go a long way in more and more people coming in and buying houses.
Right. Okay. So let me quote somebody. When you say affordable housing, if you talk about people from the BPL families, somebody from a BPL family can hardly pay an amount of say 6,000 or merely ranging from 6 to 8,000 as an EMI. I would like to quote Professor Kundru, who headed the Technical Advisory Committee on Housing Startup Index at the RBI. He said at least 11 million houses are still lying vacant. Plus, the government's focus is now moved from poor to the housing sector. Rather, the government should have actually brought the vacant houses to the market. Instead, what the government has done in this budget is they have facilitated creation of more vacant houses. What are your thoughts?
Why do you say vacant houses? You are facilitating construction of more houses. They need not be vacant houses. If you create the right kind of environment, I'm sure these houses will get sold. And if you are looking only at existing vacant houses and not creating new supply, then effectively how are you going to give a boost to cement, steel, paint and all the other core sectors in the economy? See, we need to understand that in India, structurally, consumption, we are a domestic economy, and because we are a domestic economy, our economy is largely based on consumption. So if we create more and more jobs for people, and construction sector, housing creates those jobs, then those jobs will lead to additional income. Income will lead to more consumption. Consumption will lead to higher capacity utilization, and that will kickstart the investment cycle. So if you make housing affordable per se, if the government makes housing affordable, which is what they are trying to do, and I'll come to what they are doing. If you make housing affordable, even your existing stock of houses will get ultimately sold. Plus all the new stock which you're creating will come over a period of time, and even that can get sold.
Okay. Right. So when you say that, sir, the data shows that at least over 18 million houses are still lying vacant. This is for the below the poverty line families.
See, you have to look at it like, so if a house is under construction, if a builder has applied for a permission to start constructing,
Right.
and he's going to construct 300 dwelling units over there, now will you consider 300 as under construction? It may take 4 years for the property to come up. A person buys an apartment only when the apartment is ready.
Right.
Most people.
Right.
People don't start buying an apartment just because a builder is advertised saying he's going to start constructing over here. So it's not, I mean, there may be vacant properties in certain locations, but that is not an all India phenomenon. Now, what is it that the government's trying to do? I think on the affordable housing front, they've done two things.
Right.
One is they've given affordable housing infrastructure status, which means that if, for example, take for example insurance companies.
Right.
And that's only
Which
an
is-
example. So every insurance company in India, be it private sector, public sector, be it life, be it general, they have a requirement that at least a certain percentage, I think it is 25% of the assets have to be infrastructure. Now, if affordable housing qualifies as infrastructure, then it would be possible for a builder, for example,
Yes.
to issue an infrastructure bond, which, if subscribed to by the insurance company, will qualify as infrastructure for their purpose. Now, builders may or may not be, insurance company may or may not be comfortable subscribing to debentures issued by different builders. So my sense is if someone like HDFC or anyone else was to issue a bond issue or a debenture issue with the specific objective of funding affordable housing projects,
Right.
then my sense is even that bond would qualify for infrastructure status.
Okay.
So this is one thing they've done. The second thing which is done is not done only in the budget, but this was referred to by the Prime Minister on 31st December. When he talked of a subsidy scheme. Now, just for your information, even today there is a subsidy scheme which is prevalent. The current subsidy scheme which came into practice last year says that if the income of an individual is less than 50,000 rupees a month, and if the area of the dwelling unit that is being bought is less than 60 square meters, and of course that person doesn't own any other house, then there is a 6% subsidy for the life of the loan. There is no restriction on what the loan amount should be. There is no restriction on the value of the property, but there is a restriction on the property size, and there is a restriction on the income. Now, this scheme came into practice in 2016. And therefore it applies to a certain class of people. In the new scheme which is being envisaged, what the Prime Minister talked on 31st December, he said that on 9 lakhs there will be a 4% subsidy, and on 12 lakhs there will be a 3% subsidy. Now the rules, who will qualify for this, what will be the criteria as far as income is concerned, as far as the size of the dwelling unit is concerned, these facts have not been as yet indicated. I'm sure they will be indicated in the near future. But if you go by newspaper reports, then the kind of coverage, the number of people who will get covered under these subsidy schemes will be huge, will be massive.
Okay.
So if a lot more people get covered under this kind of thing, then that will clearly create an impetus to buy houses.
Right. So overall, you have a very optimistic.
I have a very optimistic view on housing, and I have an optimistic view on the back of a couple of things.
Right.
Penetration levels are extremely low. The mortgage to GDP ratio in India is 9%.
True.
In the US, it's over 60%. In UK, it's over 80%. In some of the advanced economies, most advanced economies, it's over 50%. Emerging markets are between 20-25%. India is only 9%. So that number has to increase over time. That's number one. Number two, and according to me, the most important factor is the demographics in India.
Right.
2/3 of India's population is below 36 years of age. That was the last population census that we had. 2/3 of the people are
Young
below
population.
36 years of age. The average age of a first-time home buyer in India is 37 years, which effectively means that 2/3 of India's population today has not even looked to buy a house. But over the next 1, 3, 5, 7, 10, 15 years, people will come and buy houses. So I think structurally demand for housing will be there. If we can just make housing a little more affordable, which these subsidy schemes will do, I think it will go a long way in creating demand.
Okay, brilliant. So overall, what is your perspective on the economy as a whole, if I were to ask you?
I would
And
say India is extremely well
even
positioned.
post the demonetization,
Oh, absolutely. Pre or post. I mean, demonetization is temporary phase.
temporary phase, yes.
To my mind, India is structurally extremely well poised. You see the way foreign investors have been putting money into India.
Yes.
Foreign investors look for return, foreign investors look for governance, and obviously they're seeing all of that when they're investing money in India. So, all the macro data in India uh, today looks better than it has ever done in history. Current account deficit is low, fiscal deficit under control,
Yes.
inflation is low, interest rates are at an all-time low, at least in the last 7-8 years. Interest rates have never been as low as they are. So everything from a macro perspective looks very good.
Fine. Right. So now in the it's sixth and final policy for this fiscal monetary policy, the interest rates have not been changed. What are your thoughts going forward? Is there a hope of interest
All
rate
right,
cuts?
see, what you have to
next?
understand is interest rates are at a significant low.
Right.
If you look at interest rates today, I can only compare it with probably 2008, 2009, when also interest rates had come down a lot. But if you look at the last 15, 20 years, interest rates have been like this only once or twice in history in the 20 years. So interest rates is not by itself going to be the catalyst that the market needs either for investment or for consumption. To my mind, RBI would have had to have a tough call when they met in the last policy.
Yes.
Macro numbers all look very good for India. As I said, current account, fiscal, currency has been relatively good, and so on and so forth. But there are two factors RBI would have kept in mind when deciding not to change rates. The first factor they would have kept in mind is the fact that oil prices are beginning to rise. If you look at the time between the last policy, which was I think in November, December, and the current policy in February, in that period of 2 months or so, oil prices have run up 5%.
Right.
Higher oil prices, India is a big importer of oil, so
yes.
higher oil prices could fuel inflation.
True.
So that's something they would have kept in mind.
True.
The second thing which they would have kept in mind is what the commentary the Fed made. So the Fed policy came in between the two RBI policies. And the Fed seemed to indicate that instead of the earlier expectation of 2 interest rate hikes in the US, there could be 3 interest rate hikes, which means the Fed believes that the US economy is beginning to pick up. Interest rates in US will rise faster as there will be some degree of inflation coming over time.
Right.
Now, if we are faced with a scenario where US keeps increasing rates and we keep reducing rates, and therefore the gap in interest rates between the two countries really reduces, then that can result in a lot of flight of capital out of India.
Right.
If there is flight of capital out of India or flight of funds, overseas funds out of India, it can put some pressure on the currency, on the rupee.
Right.
The rupee can weaken. Now, if the rupee weakens, that by itself creates huge inflationary pressure because of the large amount of imports that we have, particularly on commodities and oil. So given all these facts, I think RBI would have stayed safe and said we don't cut rates now.
Right.
There could still perhaps be a possibility of RBI, even in the remaining part of the year, re-looking at interest rates, maybe giving a 0.25% cut in rates over time, keeping in mind all the various data that emerges. Outlook on monsoon is an important indicator. Oil prices, how do oil prices pan out over the next few months? Any further comments that the Fed would make, any data that we get internally in India on inflation, and so on and so forth.
Right. Fine. Finally, coming to your core sector, if I were to ask you, of course, about the HDFC being a market leader, how do you see, what is the roadmap and future strategy going forward from here?
Well, we started off as a mortgage company, but over the years we've grown into many other businesses: bank, life insurance, general insurance, asset management.
Right.
Each of these, education, finance, each of these businesses we see massive potential.
Right.
And we see potential on the back of the fact that penetration level for almost any financial service product in India is extremely low.
Right.
I mentioned to you that mortgages are 9% of GDP. If you look at the total amount of funds that have gone to all the asset management, all the mutual funds in India, it is so much lower compared to the number that you would see in the US, in the UK, even in some of the developing economies as a percentage of GDP. So total funds under management in the mutual fund industry divided by the GDP in India is extremely low. Insurance premiums, life insurance premiums to GDP is about 4 or 5%. General insurance premiums to GDP in India is less than 1%. So we have such a hugely underpenetrated market that every financial service business that we are in, we believe that the scope for growth is huge.
Right. Fine. Right, sir. Thank you so much
My
for
pleasure.
your
Thank you very much.
inputs.
Thank
It
you.
was a pleasure
Thank you.
having you.
Pleasure.
Tax and
Thank you.